Hi, everyone, and welcome aboard. Thank you for joining us for Sunday weekly market updates. My name's Geoff Pine, and I'm a senior trader here at Actions to Wealth, who bring you Sunday weekly market update each and every Sunday, and of course, lots of other free content on YouTube and the socials week in, week out, including trading buddies that come up tomorrow as the first one in the week. We hope you can join Ash, myself, and George for that. Okay, not about tomorrow, it's about today. Well, actually, it probably is about tomorrow because I'm going to show you how I set up my week, and I start pretty much with having a look at this, which is the news and data event sheet for the week. And really what I'm looking for here is not so much what news is about, but how it may affect the currency in question. In particular, this Tuesday, we're looking at the CAD, and there's no prediction here from the economists as to which way this is going to move. And that makes it far more difficult for me to get an overview of exactly what's going on, because when I've got a forecast and a previous, I can then say, all right, well, 3.9 versus 2.9 on the Chinese yuan. You could reasonably expect that if that's going to be good for the currency, then the disparity here, or the difference, is probably going to put the yuan in favour until that news announcement is made. So that's what I'm looking for. I'm looking for disparity in these numbers. And lo and behold, I can't find too much here. So if that, for instance, on the CAD, they're predicting 0.4 for the CPI figure month on month. If that was going to be 2.1 or -6 or whatever the case may be, a real big difference, then I would look to trade that in the direction of where that prediction lies. As I look through here, I can't see anything too much, but I do note that news on the CAD is pending on Tuesday, around about that time. So if I've got a bias on or against the Canadian dollar, then I must definitely pay attention to that. And the fact is, I do, and it's why I'm very interested in that CAD news that's coming up on Tuesday. So once I've been through that and got an opinion, I'll probably go back and have a look at this website, which is finviz.com. No, I don't have any affiliation to it. It's just a useful resource. And what I do is have a look at this chart here, which is telling me exactly what happens on the time period that I choose. And these currencies are all against the US dollar. So it's a 3-month relative performance against the dollar that I'm looking at. And you can see that the Swissy, the pound, and the euro and the CAD are positive against the dollar, whereas Kiwi, Aussie, and the hapless yen is dragging the chain. And then I'll zoom in a little bit and go to the month to date. Of course, we're halfway through the month now. And the Swissy, euro, CAD, pound, Aussie are all positive against the dollar. Kiwi, yen, not so much. So if you start to get it, you might start to get a picture or a theme going on there. And the theme that I'm seeing mostly here is that the CAD is fairly strong against the dollar, the Kiwi and the yen reasonably weak comparatively. Then I get down to the weekly chart, which was pretty much last week's data. And I see the Swissy and the CAD still top the list here. Euro not far behind, and the yen and the Kiwi still hapless, trailing the field, if you like. Now, I immediately got an opinion now that if I can trade, let's say, the Swissy and the CAD versus the Kiwi or the yen, and I get a pullback from the current trend, if you like, or the current momentum, then I can look to trade that. So I've got that picture in my head. Now, if your head is similar to my head, you probably want to write that down somewhere or record it so that you don't forget. And then, of course, it's opening up the charts. And I am fortunate enough to have the market scanner here provided to us by the Action to Wealth team. And it only shows me two things, or two currency pairs this week that I'm really interested in. What I'm looking for here is a weekly change of direction. Now, as primarily a range trader, I'm looking for price to come to a resistance level or a support level and bounce off it. So when I see what I call a game changer bar, which really is usually called a key reversal bar, the words wouldn't come, sorry, key reversal bar, which means that the high of the bar that I'm looking at or analysing has a high higher than the previous bar, and it's closed on or near its low, as this bar has. Now, of course, going the opposite direction, the low is lower than the previous bar and it closed on or near its high. So that's the criteria that I use for these game changer bars. And I've only got two this week that suggest on this one, euro versus the CAD, that we go short. Now, of course, like everything, when you've got one signal or one indicator or just one possible, that's not quite enough to trade, right? So you need to mound up a few layers on that directional bias and say, well, okay, this agrees with that, agrees with that, agrees with that, let's go short. So the very first thing I would do is go and look at a bigger picture, and that, of course, is the monthly chart. And euro versus the CAD is really telling me, and I'll probably throw a few trade lines in there or trend lines in there as you would know them, and look exactly where we are in context. Do I see what I call a big boss? The big boss, of course, is the dominant chart pattern. You could argue that we've got a double top and a lower high here. You could argue that we've broken that trade line and retested it. So I go through all that process and make sure that I'm getting everything right here. Do I see that as a potential short is the end of the day? That's what I'm looking for, because that's what the bar is telling me. And the answer for me, quite frankly, is yes, I do. Because we are at a resistance level. We have retested that trend line. So I agree with the direction. Do I agree with the entry is the next point. And I would do the normal things. I would look at whether I'm trading into a support level, which I probably am, whether I've got my stop loss in a reasonable position, which I probably haven't if I trade that bar, and it probably needs to be up there. Am I trading into a major level of support? I probably am, because I'm right at the monthly pivot. So that doesn't look so attractive to me anymore. And of course, we've got that CAD news event that we need to take into consideration as well. So what I propose to do is wait till that monthly pivot, indeed that support level, which is pretty clear to me. It's through here, right, where it's been resistance and support. I need to see that cleared, or I'd need to take profit before I hit that level. So if I trade that bar, I'm trading straight into the support level, and the chances of this bouncing and giving me a really rough time are high. So I wouldn't take that trade per se. What I would do, however, is wait until I've got a setup, maybe pull back off this level, give me, I don't know, a false break of resistance or something like that. Then I could get some, so I ended up here, I could get some money in the bank before that monthly pivot and therefore make myself safe in the market. So there you go. I've got a thesis straight away on EuroCAD for the week. So I'd record that in my head, but also on paper in front of me. That's what I'll be looking for with EuroCAD. Then I'll go down to my second and final one, which is actually dollar CAD, I think, if I'm not mistaken. And the weekly chart, once again, is telling me that we go short here. Now, for pretty much exactly the same reasons. And I go through the process and find out that I've got a dominant chart pattern. Have I do that? You bet I have. I've got a big double top sitting here, and I've got a lower high sitting here, potentially another lower high sitting here. In fact, I'd call that a lower high. So is that giving me a directional bias? You bet. I'm absolutely bearish this. However, once again, I've got issues. And those issues are I'm trading straight at a support level, and there's a horizontal level through there as well. So my reward to risk here on this particular circumstance would be very, very poor. And for that reason, I wouldn't take the trade per se, but once again, it's locked in my head that I want to go short here. How do I do that? Well, I wait for the retracement. And of course, we're at the wrong part of the cycle to go short anyway. I'd wait for a retracement, maybe get a lower high, maybe get a false break of resistance, maybe get a bounce off that monthly pivot. Then that's locked into my head as well. It's also written down in front of me on a chart, on a piece of paper rather. So I'm looking for a pullback on dollar versus the CAD. Then I'll be looking to trade it short. Simple as that. And that's where I am at with my game changer bars for the week. There is what I call a game changer plus bar this week, and it is Australian dollar versus the yen. And I'll point this one out to you. What does a game changer plus mean? Well, it's all my terminology. It really is a game changer bar or key reversal bar followed by an inside bar. So the weekly chart's telling me, and yes, I do have a reason to think this could go short. Again, I'm at a support level, which makes it difficult to enter on this candle per se. But here's the deal. There's the game changer bar, which means higher than the previous candle's high, closed on or near its low, and then it's followed by this inside bar. This one interests me very, very much because it's got far more going for it than that. They got pointed out on EuroCAD. Was it EuroCAD? Can't quite remember which one it was now. This is almost binary, and I'm going to point out a binary situation on Aussie dollar very, very shortly. What I see here is the potential for this to go long, but not yet. I've got a false break potential here of this trade line. What is a false break potential? I've broken the level. I've hit a support level, come back above this trend line or trade line, if you like, and I'll be looking for a retest of that. So this is right now in a position where I can't trade it long. I'm being told to trade it short by the game changer plus bar, game changer short, inside bar, telling me to go short. That's a situation that I just can't trade right now because I need confirmation of either we're not staying above this trade line, in other words, we're coming back below it, or we're going to retest that level and then go long. So have I got my eyes on it? You bet I have, because it's at a very, very important level. But can I trade it? Not at this moment. There is a confluence running through here as well, which is telling me that the false break is on, but I need a pullback before I trade that. So Aussie yen most definitely on my watch list as well. But here's the one. In fact, I've got 1, 2, 3, 4 that I'm really concentrating on this week. And they don't come from game changer bars. They come from my own observations of the market and the market structures. First one is Aussie versus the dollar. Now, the Australian dollar versus the US dollar is controlled primarily by circumstances somewhat fundamental, if you like. Two reasons. Aussie dollar is a commodity currency or commodity-driven currency, but it's also a currency that is driven by a risk-on mentality. And that is something that you need to work out, where the actual sentiment of the market is bullish, bearish, risk-on, risk-off. Before, not so much before, but as an adjunct, it's another layer to think about when you're trading the Aussie. And that Aussie yen situation that I mentioned before is the absolute beautiful gauge of that, because the yen is a risk-off currency, Aussie is a risk-on currency. So it's very binary, as I suggested. And if you can gauge what that market sentiment is at the time, I think that's a very, very good currency pair to trade. Now, this one's also very interesting. The big picture here on Aussie versus the dollar is, pardon me, clearly, and it has been for quite some time, in a downtrend. Yet there is signs of life in that this big rejection bar down here of almost 50% has come back to the in fact, it's difficult because I don't know what level this is retested. I really don't. And that's what I'm always looking for. There's the level you should, well, I suppose that's it, right? That's the level that should have been retested. I guess it was to a degree. But I've really got in my mind that this is still in a downtrend, and we are approaching or that trend line, if you like, which obviously goes through here. So is there enough in the Aussie at the moment to get it back to that level? Maybe there is. But what am I seeing on the weekly chart? I'm seeing a potential, and I've put these horizontal lines on here for a reason. There's potential for this to be a false break of that trend line, or trade line as I call them. In that, we've broken it. We've hit a strong resistance level, a resistance here, support through here, here. So that drove the market back down to where no real support, obvious level there, apart from this little recency area that we've just seen, but I don't count that, to be fair. But then we've had a retest of that level, which suggests to me that if price comes back to here, it's going to a support level. And there's a massive gap underneath here. You can see there's just daylight. There's really no support underneath this until we hit that 60 odd, 61, 62 cents again. So we're 300-400 pips away from that. So that's really interesting. In fact, I've got the inclination to place that order again. I think I placed it 2 weeks ago or whatever it was. And entry here, stop loss above the recent week's price action. That would get me a reward of 220 pips to around about nearly 400. So 1.5 to 1, 1.75 to 1, something like that. So not too dusty if that plays out. I don't think there's too much risk in that, to be fair, because if price does come back below here, as I said, I think it's going to a support level, and I don't see one. So I think that's completely on the cards, and I wouldn't be too averse to recommending that as a trade idea. Then I see on the daily chart, this particular situation was exactly the same in reverse. I told you this was binary, right? I think this is absolutely one or the other. I don't think there's any in-betweens here. So what I just described on the weekly, breakout, back underneath, retest, is exactly what I'm seeing on the daily, break below, break above, retest. The trend line, or trade line that is, which is the bottom of this channel. So my contention would be, and I probably will do this, if you're in Trading Buddies tomorrow, I'll definitely confirm it for you. I want to see how the market opens, of course. I'll put an entry here above this seller bar and put my stop loss either here or here. It'll depend a lot on how the market opens tomorrow. But can I trade in both and win on both? Yes, I can, 100%. Because the weekly has really not made up its mind, you can see that we've had indecision since we had that setup. It wouldn't surprise me at all if price goes back to this level. That's why I've got it on the chart. This level here, which is what, 68, 80 odd, and then comes down. So daily chart can get me up to here. Risk to reward's not fantastic, but the idea would be to take profit at that level, get myself safe in the market. And if it did want to challenge these highs, then I can take advantage of that. You know, it's not a prediction by any stretch, but it's cause and effect. If price goes back to here, to my mind, it goes to resistance. And if price comes back to here, to my mind, it goes to support. So that's the situation on Aussie dollar. I think it's absolutely binary. And I think one of these will take and get your profit. The other one maybe a bit later, if it's the weekly in particular. So that's Aussie dollar. Certainly, I'll be looking at that early in the morning. The next one, I've got my eyes completely transfixed on. I do exaggerate a little bit, but I'm keen on it. Let me put it that way. I'm interested in it. Is the pound versus the Canadian dollar. This is where the CAD comes in, and we spoke about the CAD news, right? And that's going to be important to these particular situations, whether it ruins them or whether it actually sets them up. is something that I'm very, very interested in. So pound versus the CAD is first cab off the rank, if you like. And I like this because this level here, which is what, $1.68, is super strong. It's been support massively, going back to 2016, I'm going back here. Every time it comes to this level, it bounces off it. And we've done that again. And guess where we are again? We've just bounced off it again. So what I'll be looking for is not for price to go through that level anytime soon, though of course it can, but to pull away from that level and then have another crack at it at some stage. What I do see forming here is a box range, and you can pull it from pretty much anywhere you want, but that looks pretty clear to me. And the next thing I think of when I see a box range is off the top to the bottom. So that's where I'm focused. What I do need to see, however, and I don't want to trade this candle because I'm not that brave, because I don't have confirmation yet that what I'm thinking will happen. But if you're of the opinion that that candle there is strong enough, and it's strong to drive price down here without a pullback, then okay. I'm not like that. I want to see a pullback before I actually get into this trade. Now, if I miss it, I'll probably get a late entry later on or down the track with a pullback at some stage. It will pull back, I believe, and give me what I'm looking for, which is a lower high. But absolutely on my watch list, and I'm hopeful that the CAD news will actually drive that setup for me. So price back to here. So maybe we get some bad news on the CAD and the pound rallies, but doesn't take out these highs, gives me a lower high. Then I've got an entry that I can take profit at the monthly pivot before I actually drive through that level. So that's pound CAD. The next one is Aussie versus the CAD. And for similar reasons, but not the same, this one is also on my watch list. Now, the monthly chart here, which is where I start everything, is telling me that we are still in a downtrend off these highs and driving a channel down here even, if you like. So I'm not concerned that the direction is wrong, which is something that needs to be checked. Then I've got a market structure, which is this broadening price pattern, which tells me, once again, similar to the rectangle, we bounced off the top. Where are we going? We're heading towards the bottom. So I want to trade that down to the bottom. And what have I got this week in terms of candle? Well, this continues to sell off, and nothing has stopped it any time in the recent past. We've had one phase down. We've had consolidation. We've had a second phase down. We had a support level. Arguably, we're at a decent support level. Resistance through here, support through here, support through, blah, blah, blah. So what am I expecting here? Well, I'm expecting a retracement. And what does the retracement give me? It gives me an opportunity to sell the rally. So that's the weekly chart. Daily chart. This is the range that I've selected, and I'm looking for price to drive back into this area and give me maybe a bounce off that level, maybe a bounce off the monthly pivot. I could put a small order in here, and if that goes wrong, but I put my stop up here, right? When I say goes wrong, if it goes into drawdown and I get a bounce off this level, I can add to the position. And if price comes back and does exactly as I think it will, then I've got a nice trade on my hands, and I've got a nice target down here as well. There's also, for those of you who like the chart pattern, to my mind, probably putting a rubber stamp on this one, is a left shoulder, a head, a right shoulder, neckline of which is there. It's been broken, but maybe it's a bit clearer on the daily. Left, head, shoulder, neckline here, been broken and retested with this bar. That's my issue. because it may not give me the pullback that I want straight away. If it goes, it goes. I just don't trade here. It's at the wrong level for me to trade. A break and retest will get me into that. So Aussie CAD, also definitely a favourite of mine this week, and I will be watching it very, very closely. And the other one, we've already spoken about it as a game changer bar, dollar CAD. And the dollar CAD, we got into dollar CAD up here and got a little bit out of it, but our trailing stop was hit a little bit prematurely, which is sad, but that's the way it goes. I pointed out before, this big double top sitting here, followed by a lower high, and now a second lower high. I think this is a very, very strong opportunity here, but you've got to remember that CAD news on Tuesday. Oh, I just lost my mouse, which makes it difficult. 2 seconds. I hate it when I drop my mouse. Pardon me. I'll reappear in a minute. There you go. So, yeah, I reckon this is a very strong opportunity coming up on US dollar versus the Canadian dollar. So watch that one. Again, we're at a buy zone right now. We're not in a sell zone. So I've got to wait for that sell zone to set up. It could come as a lower high in here at around about that 135 mark. It could come as a break and retest of that confluence area as well. So keep your eye on dollar CAD. I think it's worthwhile also. That's just about it for today. That's my analysis for the week. But on the Sunday market update these days, we like to give you a little bit of a tip. And my tip for the week for you guys is this one. Ooh. If I can share it with you there we go. You should be able to see, am I sure? And I've just been through a whole process of working out, am I sure? And if you've got that system in your brain or in your trade method of trading, not my system, but your own system, then I think you'll benefit by that. If you haven't, by developing one, by developing a process early in the week or before the week starts of setting up your charts, eliminating those that you don't want to trade and concentrating on those that you do, noting that there are potential hurdles along the way and maybe potential setups along the way as well. So you need to be sure. You know, there's a wonderful thing in trading that you gain over time, I suppose, and it's certainty. Whether you're trading a system, there's a trend trading system, fundamental trading system, a range trading system, indicator-driven system, doesn't matter. As long as you've got those checks and balances in place, rather than, if I just go to the next slide, rather than being that early bird, it's great to catch the market at its turning point before, but actually doing that consistently rather, is an absolute art form. So I encourage you to have at least a checklist or what I call a cheat sheet, and you can have it on your monitor, on your desk in front of you. It doesn't matter, but having it in your head, especially when you're starting to trade, is impossible. Because, and I used to say that I remind the elephants, but as I get on in age, I can assure you that the elephants are a long way ahead of me these days as far as remembering things. But it's, you know, if you're going to take 10, 15 trades a week, or who knows, 7, 6, 5, 4 trades a week, are you going to remember every one? You're going to remember the result of every one. You're going to remember how the setup was. You're going to remember what happened in that particular scenario that either made you money or lost your money. And that's the important thing. You know, your journal is very important, but also your checklist is very important to say, okay, have I got my stop loss in the right place? If I want to trade this bar here, where am I going to put my stop loss? Underneath the bar, right? Well, fine. You would have got a nice little profit out of that, maybe 1.5 to 1. But did you take profit at that level? And why would you take profit at that? Well, because you got a reversal bar. Maybe that was a good place to take profit. And if you didn't have your stop loss in the right place, which was probably here, then you're out of the trade. You've either lost here or you didn't get enough profit in the bank. One of the two. So go through that process and ask those questions. Go back in your chart, have a look at them. But then you'll gain a very, very solid system that gives you that checklist, right? Okay. I love the candle. I love the fact that it's broken that level. I want to enter here so that the market's going to heaven here in hand as quickly as possible. So I've got to get in, right? And that's one thing. But putting your stop loss in the right place is another. And in this case, underneath the candle wasn't good enough. Underneath this swing was probably the place to put it. This candle here, a hammer, is it in the right position? Is it at a support level? Maybe, arguably, right? And if so, where am I putting my stop loss here? Am I putting my stop loss underneath this one? Am I putting it underneath this mini swing, or am I putting it underneath the real swing down here? In which case, did you take profit at this level? I'm not trying to tell you how to trade a trend, because I'm not a trend trader anyway, but what I am suggesting is that note all these things as you develop your system, and note that you're doing either the right thing or the wrong thing. And okay, if I'd actually put my stop loss here, I would have made truckload more money rather than where I did put it. So that's the little tip I'm trying to make. Have your little checklist, right? I'm not a stock trader per se either, though I'm trying to learn them. But this is just not an example of something that you may want to do. The list is probably different to what you're used to or what your system allows. But this one's just an example, as I say. But have one. That's the whole point of the exercise. I've got one for my trading system known as the slingshot. This is one that actually asks me the questions or tells me exactly what to look for when I've found a setup. But then I've got a second one that actually tells me how to manage the trade as well. So if I forget anything, but it's not so much a matter of forgetting anything, it's a matter of checklisting. Am I doing what I need to be doing? Is one candle a reason to take the trade? And if it is, how did that go? How does that work out over time? They're the sorts of things that checklist can, I guess, as I say, put a rubber stamp on, or otherwise find the fault. Have a checklist, and don't be afraid to put it in front of you on the desk, or stick it to your monitor. Just have it, because it will save you a lot of grief down the track, I can promise you. You don't need one thing to go into a trade. You need a multiple of layers to get into a trade, as I've hopefully demonstrated in the way I approach the markets on a Sunday/Monday. Guys, that is it for this edition of Sunday Market Updates. I sincerely hope that you've gained something from it. And there will be another one next week. As I said, there will also be Trading Buddies tomorrow with Ash, myself, and George. Tajul, I see you've got a question there. I'll just better address that before we go any further. Daryl, you're welcome. Jackson, you're most welcome. Tuesday, April 18th. Inflation rate year on year. Okay, cool. The trading economics calendar. You're welcome, Phil. Thank you, Tajul. Have a great week ahead, guys. We'll catch you sometime during the week. See you later. Bye-bye for now.